Hi, my name is Karim and I'm a portfolio manager and wealth advisor at RBC Dominion Securities. Welcome to my new 10-part video series titled Karim's 10 Investment Principles. I will even show you how great investing is a lot like playing smart tennis or hockey. So go grab your racket or a hockey stick or a notebook and join me every week for the next 10 weeks as we rally through the fundamentals of investing. Karim's investment principle number 1 of 10. Spend less than you make and invest regularly. The first rule, spend less than you make and start investing early and regularly. Why? Because time and consistency are your greatest friend. Even saving $100 a month, started in your 20s, can grow into a fortune by retirement without even changing the amount. Just like tennis or practicing hockey. Hitting balls or pucks every day, even for 20 minutes a day, would build a champion. It's not about intensity in any one day, but it's repetition over years. You do not need to be perfectly timing the investment. You just need to begin and stick with it. Compounding does the rest quietly in the background. Start small, start now. Develop the habit to save and invest, and your financial strength will grow, just like your backhand or slap shot. It's week 2 of my 10-part series, and today's principle is all about investing for the long term. Most people overestimate what they can earn in 1 year and underestimate what they can build in 20 years. Investing for the long term means staying focused on your plan through ups and downs. Just like a tennis match, you can lose a few points or even a set, but still win the match. It's the big points, not the most points, which determine who wins. Short-term market noise is like crowd distraction or a bad call. Let it go. The real winners, they zoom out, keep playing their game, and trust their strategy. Think in years and decades, not days and weeks. That is how real wealth and real trophies are earned. It's week 3 of my 10-part series, and today's principle, have some liquidity. Before investing, build a safety net. Liquidity means having quick access to funds for emergencies without needing to sell investments during a downturn. I suggest keeping 6 to 12 months of living expenses handy. It's like footwork in tennis. You may have a powerful shot, but without solid footing, you will trip when the pressure is on. Liquidity gives you stability. It lets your investment stay in the game uninterrupted when life throws you a surprise shot. That's how pros stay grounded. It's week 4 of my 10-part series, and today's principle, know your risk tolerance. How much volatility can you really handle? That is what risk tolerance is all about. It's easy to feel brave when the markets are rising, but how do you react when markets drop 20, 30, or even 40%? In tennis, some players love rushing the net, others prefer staying in the baseline. Your investment style should match your comfort level, just like your game strategy. If you invest beyond your comfort zone, emotions will take over, and that's when you make mistakes. Know yourself, know your limits, because investing, like tennis, rewards players who stay calm and consistent under pressure. It's week 5 of my 10-part series, and today's principle, have a written investment plan. Would a tennis pro enter a match without a game plan? Would a hockey team go into a game without a plan? Of course not. Same with investing. Have a written investment plan for your strategy. It lays out your goals, time frame, your risk tolerance, and what to do when the markets get wild, which they often do. A written investment plan is your North Star, keeping you grounded during hype and panic. Without a plan, you are just reacting. With one, you are executing. Write it down. Review it regularly. And when in doubt, return to your game plan. Welcome back. It's week 6 of my 10-part series. And today's principle, diversify your portfolio. You've heard it. Don't put all your eggs in one basket. That's diversification. It means spreading your investments across asset classes, sectors, even geographies. In tennis, you do not win matches with just your forehand. You need volleys, slices, and drop shots. A well-rounded game handles every opponent just like a diversified portfolio handles different market conditions. Diversification will not guarantee huge wins, but it will help you avoid big losses. Diversification protects wealth, just like having every shot ready when you step on the court or on the ice. It's week 7 of my 10-part series, and today's principle, rebalance regularly. Portfolios drift over time. Stocks rise, bonds fall, or vice versa. Suddenly, your 60-40 becomes 75-25. That's more risk than you signed up for. That's why we rebalance regularly. It is like adjusting your game mid-match. If your opponent keeps attacking your backhand, you do not keep playing the same way. You shift your tactics. Rebalancing brings your portfolio back to intended balance. It is not exciting, but it's smart, and it keeps you playing a consistent and winning game. It's week 8 of my 10-part series, and today's principle, control your emotions. When markets fall, fear kicks in. When markets rise, greed takes over. Emotional investing is like smashing your tennis racket after a double fault. It may make you feel good at the moment, but it rarely helps. Yes, John McEnroe was unique. Smashing rackets and breaking hockey sticks does not help most of us. Tennis champions like Sinner, Alcaraz, or my hero Bjorn Borg stay calm, win or lose a point because they know the match is long. In investing, the best results come from sticking to your plan and staying calm, not reacting to every market swing. Discipline beats drama. Stay cool, stay focused. That's how pros stay on the court and markets stay on top. It's week 9 of my 10-part series, and today's principle, avoid market timing. Trying to time the market is like guessing when your opponent will double fault. It's nearly impossible. You'll have to be right twice, when to sell and when to get back in. Most investors, even the pros, can't do it consistently. You may get lucky once or twice, but that's not skill, it's luck. Missing a few of the market best days can cost you big. Like tennis, investing is about staying in the rally, not going for winners every shot. Stick with your strategy. Stay on the court. Over time, that's how matches are won and wealth is created. Here we are, week 10, my final video. Thank you for staying with me the whole series. My final investment principle, stay disciplined and process-driven. Even the best strategy fails if you abandon it when things get tough. In tennis, players follow routines, pre-serve rituals, recovery habits because discipline builds results. The market will tempt you with flashy trends, scary headlines, short-term panic reactions. Ignore them. Stick to your process. Review, rebalance. Keep your head and stay calm. Do not panic and react. It's not about the brilliance. It's about being consistent. That's how champions are made and wealth is created. Thank you for staying with me and exploring my 10 core investment principles. I hope this quick series of videos helped you feel more comfortable, confident, and more focused, and a little bit more prepared to build and grow your wealth. And if you have noticed, investing is like tennis or hockey. Both require discipline, patience, and good strategy. And you don't win every point or score on every shot, but with the right mindset, you stay in the game and give yourself the best shot for long-term success. That's how Novak won 24 majors, the Panthers won back-to-back Stanley Cup, and my hero Warren Buffett has delivered the best results over decades. Develop and work your long-term strategy, and maybe your tennis swing or slap shot too. So here's my invitation to you. Whether you want to chat about your portfolio or discuss these principles in more details, I'm always up for a good conversation. Call me at 416-956-8888, and I would love to chat with you. Until then, stay focused, stay steady, and keep investing.
Quick reminder, don't forget to subscribe and hit that bell so you don't miss any future videos.